Welcome back to Doc Tickers, where we break down these earnings calls so you don't have to.
Exactly.
And today we are diving deep into the world of semiconductors with NXP's Q4 2024 report.
Ooh, fun.
Yeah, so get ready for some intriguing insights.
Absolutely.
Especially their push into software-defined vehicles.
Yeah.
It's a bold move, and we're going to be dissecting whether this is actually a brilliant play or a risky gamble.
I think it's definitely a very fascinating pivot for NXP.
Right.
This is a company that's known for its hardware, but they're clearly signaling that software is a huge part of their future.
Right. And to understand why, I think we need to look at the numbers first.
Yeah, let's do it.
So revenue came in at $3.11 billion for Q4.
Okay.
A 9% drop year over year.
Yeah.
I have to admit, seeing that initial number, I was like, is a semiconductor party over?
It's an understandable reaction to have, I think, to that headline number.
Right.
But I think when we take a deeper dive, it reveals a more nuanced story.
Okay.
So NXP actually beat revenue expectations, and their non-GAAP operating margin landed at a pretty healthy 34.2%.
Okay.
That tells me that they're managing costs effectively in what is a very turbulent market.
Okay. So maybe not a complete meltdown, but still, a 9% drop is significant.
Yeah.
What's driving that decline?
Right.
Is it broad-based, or is it concentrated in specific areas?
So I think it's a mix of factors. I think the global economic slowdown is definitely impacting demand, but we're also seeing the aftershocks of, those chip shortages that we all live through, right?
Right.
Remember how companies were just stockpiling inventory?
Yep.
Well, now they're working through all of that excess,
Makes sense.
which is leading to these inventory corrections, particularly in the automotive sector.
Right. So we're seeing a combination of lower demand and these inventory adjustments hitting their top line. But you mentioned regional variations.
Yeah.
So what's the story there?
So this is where I think it gets interesting.
Okay.
NXP's performance varies dramatically depending on where you look. So Asia, specifically China, has been their star performer, actually showing growth while other regions struggle.
Wow.
I think their success there is tied to a few factors. China's economy has proven to be much more resilient. And they're aggressively pushing electric vehicles, which creates a huge demand for their chips.
Right.
In contrast, Europe is grappling with a weaker economy, obviously the ongoing conflict in Ukraine.
Yeah.
And the U.S. is battling inflation and a pullback in consumer spending.
So China's growth is offsetting some of the weakness elsewhere.
Right.
But the overall picture is still pretty mixed.
Yes.
Now, let's talk about their automotive segment.
Okay.
Since that's been their bread and butter for so long.
Right.
How are they handling this inventory digestion and the shift to EVs?
Yeah, so the automotive sector is going through a really significant transition, and it's impacting everyone, including NXP. Overall, they're seeing revenue declines in this segment, which isn't surprising.
Makes sense.
However, I think there is a fascinating subplot unfolding here.
Interesting.
While traditional car sales are sluggish, certain areas are booming, and NXP is right in the thick of it.
So they're doubling down on the future of the car, even if the present is a little bit bumpy right now.
Right.
I'm intrigued.
Yeah.
Tell me more about these growth areas.
So they're going all in on software-defined vehicles, automotive connectivity, advanced radar systems, and the electrification of powertrains.
So it's a clear sign that they're not just reacting to market shifts, but they're actively trying to shape the future of what mobility looks like.
Yes.
And I think this all ties back to their push into software, which we'll definitely explore more in depth.
Absolutely.
But before we get there, let's address the elephant in the room.
Okay.
Their two recent acquisitions,
Yeah.
Aviva Links and TT Tech Auto.
Yep.
These seem like key pieces of their strategy.
Absolutely. These acquisitions are like puzzle pieces clicking into place. So the Aviva Links acquisition strengthens their position in multi-gigabit automotive connectivity, which is critical as cars basically become data centers on wheels.
Yeah.
Imagine streaming high-definition movies, getting real-time traffic updates, downloading software updates, all while on the move.
Wow.
That's the future they're building towards.
Right. And what about TT Tech Auto?
Yeah.
That one seems even more strategic given their focus on software.
You're spot on.
Okay.
TT Tech Auto is all about software for vehicle safety and real-time integration, specifically for those software-defined vehicles we keep talking about.
Right.
They develop platforms like MotionWise, which enables advanced driver assistance systems and autonomous driving capabilities.
Okay.
So think about it. NXP now has access to the brains behind some of the most sophisticated vehicle software out there.
So are they trying to become a software powerhouse?
Yeah.
Challenging the traditional automotive software giants?
That's the million-dollar question.
Right.
I think they're definitely signaling a shift, moving up the value chain from a hardware supplier to a company that can actually shape the software ecosystem of cars. It's a very bold move, and it's definitely raising eyebrows across the industry.
Right. And it raises a whole bunch of other questions about their capabilities, their competitive landscape, their long-term vision.
Right.
We'll dig into all of that in the next part of our deep dive.
Absolutely.
But first, we need to take a closer look at their financials.
Okay.
Despite the revenue dip, there are some bright spots worth highlighting.
For sure. Welcome back to Talk Tickers. Let's continue our deep dive into NXP Semiconductors Q4 2024 earnings call.
Yeah.
We left off talking about their financials, and I think it's important to highlight their commitment to returning value to shareholders, even amidst a revenue decline.
Yeah, you're right. They returned over $2 billion to shareholders in 2024.
Right.
Through buybacks and dividends. That's a strong signal.
Yeah.
Especially considering the current market conditions.
Right.
Suggests they believe in their long-term prospects.
Yeah.
Even with the short-term headwinds.
Yeah.
But to be honest, I'm a bit puzzled.
Okay.
How are they maintaining such strong cash flow when their revenue is down?
That's a great question, and it points to the disciplined approach they're taking.
Okay.
Despite the revenue dip, they're generating strong free cash flow.
Okay.
Which is a key metric for any company.
Right.
But especially crucial in uncertain times like these.
Makes sense.
And they've achieved this through tight expense management, strategic inventory reduction, and a focus on profitability over chasing growth at all costs.
So they're playing a smart game in a tough market.
Yeah.
But let's dive into their specific business segments, because I think those numbers paint a more detailed picture of their performance.
Let's do it.
We briefly touched on automotive, but I'd love to understand their other segments, what's happening in industrial and IoT.
Sure.
I know that sector has been hit by weak demand and inventory issues.
Yeah, you're right. That segment's revenue was down 3% for the full year.
Okay.
But when we look closer, I think it reveals a potential turning point.
Interesting.
So in Q4, they actually saw signs of stabilization with sequential performance remaining flat.
Okay.
Now, it's too early to declare victory, but I think it's a positive sign heading into 2025.
That's encouraging.
Yeah.
Now, what about mobile?
Okay.
Smartphones and connected devices, it's a huge market.
Massive.
How did that segment perform?
So mobile had a decent year overall, with full-year revenue up 13%. However, I think a lot of that growth stems from easy comparisons to the previous year.
Right.
When we zoom in on Q4, we see a bit of a different story.
Yeah.
Revenue was actually down 2% year over year.
So even though mobile seems to be holding up better than some segments, they're not immune to the slowdown.
Right.
Is the softening smartphone market the main culprit?
That's definitely a contributing factor.
Okay.
The overall smartphone market has been, pretty sluggish, and that's impacting NXP. However, they are seeing pockets of growth within mobile, like wearables and other connected devices that could offset some of the weakness.
Interesting.
Yeah, it's a very dynamic market, and it'll be really interesting to see how they navigate it.
Okay.
Yeah.
Moving on, what about their communication infrastructure and other segment?
Right.
That one had a particularly rough year.
Yeah, that segment saw revenue down a significant 20% for the full year.
Wow.
With Q4 also reflecting a decline of about 10% year over year.
Okay.
I think the culprit here is a combination of lower sales across their portfolio and an accelerated end-of-life situation with some of their digital networking products.
So some of that decline is intentional as they phase out older products.
Right.
Okay.
Yeah.
We've covered a lot of ground.
We have.
Their overall performance, the regional dynamics, their push into software-defined vehicles, and a closer look at all their key business segments.
Yeah.
What's the main takeaway from all of this?
Despite the challenges, NXP is taking a very strategic and disciplined approach. They're controlling their inventory, investing in future growth areas like software-defined vehicles, and managing their costs effectively.
Right.
It's a classic example of playing the long game.
Yeah.
Even if it means sacrificing short-term gains.
They seem to be weathering the storm quite well.
I think so.
But I'm curious about the long-term vision here.
Yeah.
They've placed some big bets,
Right.
especially with these acquisitions and their move into software. where are they heading and what are the potential implications?
I think their strategic moves signal a shift from being a predominantly hardware-focused company
Okay.
to a player that wants to shape the software ecosystem of the future,
Right.
particularly in the automotive space.
Yeah.
It's a bold vision, and it's one that could have significant ramifications, not just for NXP, but for the entire industry.
I'm really intrigued by this software play.
Yeah.
It's such a departure from their traditional strengths. Do you think they can pull it off?
Right.
Can a semiconductor company really transform itself into a software powerhouse?
That's a great question, and it's one that I think investors are really grappling with.
Right.
It's a very different game than hardware.
Yeah.
And they'll need to demonstrate their ability to compete with these established software giants.
Yeah.
I think they've got the resources, they've got the talent, they have the vision, but execution is key.
Right. So it's a bet on the future, and time will tell if it pays off.
Yeah.
But let's not forget, the landscape they're operating in is constantly shifting.
Right.
What's their outlook for the coming quarters?
Yeah.
Are they optimistic or are they battening down the hatches?
I think they're taking a cautious approach given the current global economic uncertainty.
Yeah.
For Q1 2025, they're projecting revenue of about $2.825 billion, a 10% decline compared to the same quarter last year.
Yeah.
They're seeing continued weakness in Europe, but they believe that the Americas are starting to bottom out.
Right.
And as we discussed, China continues to be a bright spot.
So a mixed bag, but with some potential for improvement in certain regions.
Yeah, I would say so.
Sounds like they're navigating a complex environment.
For sure.
With a balanced perspective.
Uh-huh.
But their future hinges on more than just regional performance. Their success in software is a critical factor.
Absolutely. The software-defined vehicle market is projected to just explode in the coming years.
Wow.
And NXP is positioning themselves to capitalize on this growth.
Makes sense.
But as we've discussed, it's not without its challenges.
Right.
They'll need to prove they can develop competitive software solutions,
Uh-huh.
integrate those solutions effectively into these complex vehicle systems,
Right.
and navigate the evolving regulatory landscape.
It's a high-stakes game, and it'll be fascinating to see how it unfolds.
Yeah.
Now, before we get into our This Is Not Financial Advice segment,
Okay.
I want to touch on something you mentioned earlier.
Okay.
The convergence of several major trends.
Mm-hmm.
You mentioned software-defined vehicles,
Right.
but there's also the increasing importance of connectivity, data, and the rapid growth of the electric vehicle market.
Yes.
How do all of these trends tie into NXP's story?
That's a brilliant observation.
Yeah.
NXP is right at the intersection of all of these trends,
Okay.
which makes their story so compelling. They're not just supplying components, they're aiming to be a key enabler of the future of mobility.
Right.
Their chips power the brains of connected cars, their software enables advanced driver assistance systems, and their expertise in power management is crucial for the transition to electric vehicles.
So they're not just riding the wave, they're trying to shape the wave itself.
Exactly.
That's a powerful position to be in.
And it makes their journey even more fascinating to watch.
Right.
They're making bold bets, they're taking calculated risks, and they're aiming to redefine their role in a rapidly changing industry.
Right.
It's a high-stakes game, and the outcome is far from certain.
Now, speaking of high-stakes games, let's shift gears to our This Is Not Financial Advice segment.
All right.
Remember, this is purely hypothetical,
Of course.
for entertainment purposes only.
Just having some fun here.
Exactly.
Exploring some outrageous yet plausible trade ideas.
Okay, lay it on me. What's your wild idea inspired by NXP's move into software?
Okay, so we've talked about the possibility of NXP's software ambitions extending beyond vehicles.
Yeah.
What if their software becomes so successful and widely adopted
Okay.
that they actually decide to spin off their software division
Yeah.
into a separate publicly traded company?
Whoa, that's a bold move.
Right?
But I can see the logic.
Yeah.
They could unlock significant value
Uh-huh.
by creating a pure-play software company that's laser-focused on growth and innovation.
Exactly. And that new entity could be a major player in the software-defined everything world.
Right.
They could leverage their expertise in automotive software and apply it to other industries like industrial automation, robotics, even smart cities.
So the trade here would be to anticipate this potential spinoff and buy an XP stock, now hoping to benefit from the creation of this new software entity.
That's the gist of it, yes.
Okay.
But again, this is just a thought experiment. It's a long shot bet.
Right.
But if it were to happen, the potential upside could be enormous.
But of course, this is not financial advice.
Of course not.
Do your own research, consult with a financial professional, and don't base your investment decisions on our wild ideas.
For sure.
Now, before we wrap up part 2, I want to go back to NXP's core business.
Okay.
They're making a big push into software,
Right.
but they're still heavily reliant on their chip business.
Uh-huh.
How's that playing out in this volatile market?
Yeah.
What are some of the key trends and challenges they're facing on the hardware side?
Right.
Welcome back to Talk Tickers. We're wrapping up our deep dive into NXP Semiconductors Q4 2024 earnings call.
Yeah.
We've covered their financials, their strategic push into software, and even explored a wild what-if scenario in our This Is Not Financial Advice segment.
It was a fun one.
It was a fun one. Now let's tie it all together.
Okay.
Crystallize the key takeaways for our listeners.
Yeah, it's been a fascinating journey through NXP's world.
Yeah.
We've seen them navigate this really complex landscape
Right.
marked by a global economic slowdown, inventory corrections, a fierce competitive environment.
Uh-huh.
Yet amidst all these challenges,
Yeah.
they're making these bold moves, they're investing in the future and demonstrating this disciplined approach to managing their business.
You've painted a very vivid picture of their journey.
Right.
If you had to distill it down to a few key takeaways,
Okay.
what would they be?
I think first and foremost, NXP is playing the long game. They're prioritizing profitability and stability
Okay.
over chasing these short-term gains.
Makes
They're investing heavily in areas like software-defined vehicles, automotive connectivity, electrification. They're betting on the future of mobility even as the present remains uncertain.
Their commitment to shareholder value is also pretty noteworthy.
Oh, absolutely.
Returning over $2 billion to shareholders through buybacks and dividends
Right.
during a year marked by revenue decline,
Right.
that sends a powerful message.
It does.
Signals confidence in their long-term prospects,
Yeah.
commitment to rewarding their investors.
Absolutely. And let's not forget their strategic acquisitions.
Right.
Aviva Links and TT Tech Auto, these aren't just random purchases. These are carefully chosen pieces of a larger puzzle.
Right.
These acquisitions bolster their capabilities in critical areas like automotive connectivity and software, paving the way for their ambitious move up the value chain.
It's a bold strategy and one that carries inherent risks.
Oh, for sure.
Can they successfully integrate these acquisitions?
Right.
Can they truly compete with established software giants?
Right.
Can they navigate the complexities of this rapidly evolving industry?
Right.
These are all open questions,
They are big questions.
and the answers will determine their fate.
Yeah, you've hit on a crucial point.
Yeah.
Execution is everything.
Hmm.
I think they have a compelling vision, a strong track record, a deep understanding of the markets they serve,
Uh-huh.
but turning that vision into reality requires flawless execution, especially in a competitive and dynamic environment.
So we've established that NXP is at a crossroads.
Yeah.
They're making big bets, facing significant challenges, and operating in this rapidly changing landscape.
For sure.
What does this all mean for someone who's following their story, maybe even considering investing in their stock?
Right.
What are the key factors to watch, the potential red flags and the potential catalyst that could propel them forward?
All right, so here are a few things to keep an eye on.
Okay.
First, track their progress in software-defined vehicles.
Yeah.
Are they gaining traction with automakers?
Mm-hmm.
Are they developing truly competitive software solutions? Right.
Are they able to integrate those solutions effectively?
Makes sense.
Their success in this arena will be a key determinant of their future growth.
Their ability to attract top talent in the software space will also be crucial.
Oh, absolutely.
They're competing with tech giants and startups for the best engineers and developers.
It's a war for talent out there.
Yeah, winning that talent war is essential for their software ambitions.
Yeah, and don't overlook the geopolitical landscape.
Right.
The ongoing tensions between the U.S. and China could really impact their supply chain,
Yeah.
their access to key markets, and their overall growth prospects.
Right.
Keep an eye on how they navigate those geopolitical complexities.
So we've got the software progress, the talent acquisition, and the geopolitical factors.
Uh-huh.
Anything else our listeners should be watching?
Pay attention to their ability to control costs and maintain profitability, especially as they invest heavily in these new areas.
Right.
A disciplined approach to expense management will be crucial for weathering the current economic storm. Makes sense.
And emerging stronger on the other side.
Excellent advice. And of course, always remember that past performance is not indicative of future results.
Right.
Investing in any stock carries inherent risks,
Absolutely.
and thorough research and careful consideration are essential.
Couldn't agree more.
So I think this deep dive has provided valuable insights into NXP's current state,
Yeah.
their strategic direction,
Yeah.
and the key factors that will shape their future.
Right.
But it's just a starting point.
Absolutely.
Further research, independent analysis, and a careful assessment of your own investment goals and risk tolerance are essential before making any investment decisions.
100%.
Well said. And on that note, we'll wrap up our Talk Tickers deep dive into NXP Semiconductors.
Great deep dive.
As always, this is not financial advice.
Of course.
Do your own research.
Yeah.
Consult with a financial professional, and stay tuned for our next episode,
Yes.
where we'll explore another fascinating company.
Can't wait.
Uncover the hidden stories behind their numbers.
Until next time, happy investing.